Fellow investors, and welcome back to Borex Investing. This channel is all about clear, research-driven analysis and investing strategies you can actually use. So today we're going to be discussing what to expect from Palantir's Q2 earnings, which are dropping on August 4th after hours. So this is going to be one of the most anticipated quarters yet, with the stock recently reaching all-time highs, surging past 150 into the 160 range. So investors are really wondering, can Palantir keep up with the momentum? So we'll start by recapping Q1, we'll discuss what worked, what didn't, and then I'll walk you through 3 potential scenarios for Q2 and how I'd value the stock in each one. So let's get to it. So Palantir's Q1 earnings that were released back in May were very strong on paper. Revenue came in at about $884 million, which was an improvement of about 39% year over year. So that obviously exceeded expectations. Their US commercial revenue jumped 71%, showing explosive growth thanks to a broad adoption of AIP across new sectors. So their government business also continued to deliver, with US public sector revenue up 45%, fueled by new defense and intel contracts that were given to Palantir by Donald Trump. Net income more than doubled to $214 million, and they maintained a very healthy adjusted operating margin of about 44%. But not everything was perfect. The earnings did show that Palantir did struggle, at least in their international commercial revenue. So growth outside the US was relatively weak, and that's where the market got a bit cautious. So the stock even dropped after hours right after earnings because investors were concerned about their slowing international growth. So Q2 earnings will be released on August 4th after hours, and here's what the analysts are expecting. They're expecting a year-over-year growth of about 38% in revenue, EPS of around 14 cents per share, and mostly growth led by the US commercial segment, which continues to outperform. But the market is really going to want to see signs of improved international demand, better pilot to production conversion rates, and stronger global enterprise traction for AIP. So let me walk you through my 3 different scenarios and how I see Palantir being priced after this earnings report. Scenario 1 would show strong earnings. So this would show revenue growth of about 40% year over year. So this is expecting that US and international commercial revenue would both accelerate. So in this scenario, AIP would continue to scale globally and pilots would be converted into enterprise deals. Earnings per share would beat expectations and management would lift full year guidance again. If we get this bullish outcome, I'm expecting Palantir to re-rate towards $170 per share. But hype and excitement on the market might even push it closer to $200 per share after a very strong earnings beat. So this would reflect very strong earnings growth and improved confidence. A very realistic scenario 2 would be a simply good earnings. So in this case, revenues would grow around 35%. International commercial would show some type of recovery, even if it's not explosive. EPS would meet or slightly beat, and full year guidance would be reaffirmed. I think in this more balanced case, the stock would stabilize around $150 per share. So it would show us that Palantir is executing very well, but it would also give room to prove that they can scale AI adoption globally. Now, scenario 3, which is possible, is a slowing of earnings. So let's say revenue growth came in at the low end of expectations, let's say between 30 and 34%. International revenue would stay sluggish or even drop. EPS would only meet or slightly miss, and future guidance would remain unchanged or would just be very vague. So this is where the stock price might actually decompress. The valuation remains sky high, so without this really broad growth, investors may sell the news. So in this case, I would actually see Palantir dropping to about $120 per share. But for me, this would actually be a buy the dip moment. So we have to remember that Q2 had a lot of uncertainty in the market, specifically around tariffs and whether or not Trump would actually go ahead and fire Jerome Powell. I think that now is calmed down, so we don't have to worry about it. But we have to remember that when Q2 was ongoing, these were some of the concerns that were spooking investors and actually spooking a lot of Palantir's commercial customers. So once the rate cuts actually come and we do get a new Fed chairman, I think that will drive tremendous growth for Palantir, and that's when I really think their stock price will take off. But again, I expect that to occur next year. Well, so there you have it. 3 clear paths for Palantir heading into Q2 earnings. So personally, I'm leaning more on the good to strong scenario based on the very strong US contract momentum and rising AI adoption. We have to remember that Palantir is very close with the current administration, so that should help them for the most part. It's really the international commercial revenue that's the wild card. And And if that metric does show any bit of life, the bulls could take over this very quickly. So let me know in the comments, what scenario are you betting on? Are you buying, holding, or trimming ahead of earnings? So if you found this useful, please like and subscribe for more deep dives like this. So I did recently do a Palantir video on my price targets for the next few years, so check that out here as well. All right, thanks for watching, and as always, stay patient, stay disciplined, and stay invested.